look at the three images below. And so we've got the rock climber without the ropes. We have the person on the slack line over the canyon, and we have the person skydiving. What is your initial reaction to those images? Would you participate in any of those things? Pause the video to answer that question. All right, so all three images have one thing in common, and that is risk. How would you define risk? What are some other risky activities you can think of? And how can you protect yourself from those risks? Pause the video and answer those three questions. All right, so how can we protect our financial well-being? Well, insurance keeps our finances safe even when the unexpected happens. So insurance is important because with insurance keeps you from potentially losing money at times that you can't afford to lose money. Insurance is going to be something where, whether we're talking about car insurance, home insurance, life insurance, whatever, the consequences of not having that are so dramatic and so powerful that it's important to keep yourself safe from that. And so, yes, insurance is going to cost you a little bit of money. Yes, insurance is going to be annoying to pay. It's going to be annoying to try to understand. But the other result is complete financial ruin when something happens. And that's not something that we're incredibly interested in. So an insurance policy is a contract between the consumer, that's you, and the insurance companies that outlines coverage plans. So coverage can be for a lot of different things. And we'll talk about some of those policies in a little bit. For example, you might have health insurance, but that doesn't mean every medical service is covered. The insurance company explains what the insurance company will and will not pay for. So you might have one where they pay for dental and then another plan where they don't pay for dental or vision or chiropractic or something like that. You might have a situation where you have to pay a certain percentage and they have to pay a certain percentage, where certain elective procedures are covered in a certain way and certain elective procedures are not covered, or no elective procedures are covered, or you have to go to a certain doctor. Whatever it is, the insurance company will create a contract and say, this is your side of the contract. You pay this amount per month and we'll pay this in case this happens, and then after you pay this other thing. So it can become complicated, but insurance generally is not what protects you from having to go to the hospital, but what pays for the hospital visit if you go. It doesn't protect your car. It pays for car repairs or replacement if you have an accident in your car. It would not protect your life if you have life insurance, but it would pay out money to cover bills if you ended up dying. So I want you to pause the video and list all the different types of insurance you can think of. I just gave you three. I gave you health insurance, car insurance, and life insurance. Think about what else you can find out. See how you can do. So here's some that I thought of. We've got health insurance, auto insurance, and that would fit with car, motorcycle, RV, and boat. Homeowners insurance, that would be, so if you own your home and something happens, that the homeowners insurance would pay to fix that. Renters insurance is sort of what you would get in replacement if you don't own your home. A lot of places, when you are renting a place, will require you to have renters insurance in case you light the apartment on fire. They would charge your renters insurance, and so they wouldn't have to charge their own insurance and have premiums go up. It's also a good idea to have renters insurance just in case you have all your things stolen. Renters insurance is very, very cheap. Life insurance, talked about that. Pet insurance. Pet insurance is the thing where if you have to take your pet to the vet, they will pay for that trip. Sometimes it's kind of hit and miss on whether they'll do that. Traveler's insurance in case your trip gets canceled. And personal property insurance, that would be like if you had something that was really valuable that you wanted to insure, like maybe a painting. You have a $1 million painting and you want to make sure that is properly insured against theft or damage or something. You could get that done as well. Depending on your needs, you will seek different types of protections. I don't have personal property insurance because I don't have anything that's that valuable that can't fit into any of these other categories. I don't have renter's insurance because I don't rent. I don't have pet insurance because I've tried insurances before. I've tried pet insurance before and it didn't work out for me. I don't usually do traveler's insurance, but definitely I will do. I have these first three, and I have life insurance. Okay, so a few words here that you need to know about. The first is premium, and the premium is basically just the amount paid to the insurance provider every month in order to maintain an insurance plan. So, you might get a basic health insurance plan, and maybe it's not through your employer, and so your basic health insurance plan costs you $150 a month. That is the premium. And then the copay, that's primarily for health insurance, the amount owed each time you visit the doctor. And so they want you to, and that's usually, $10, $20, $30, $50, something like that. And the reason for that is they don't want you to just go to the doctor and assume that everything is always going to be free and paid for. That's bad for the insurance company and their bottom line. And it's bad really for everybody who's paying into the insurance system. So they're going to say, well, at least you have to pay something every time you go to the doctor. And then a deductible is measured on a yearly basis, and that refers to the amount you must pay before the insurance provider begins to cover costs. So let's say you have a medical insurance plan and you have $150 per month premium and a $20 per visit copay, and then your deductible is $1,000. Well, the first $1,000 you spend in a calendar year on your medical insurance, that is going to be going towards your deductible. You pay 100% of that. And then after that, there's going to be some formula where after you reach your deductible, your insurance company will pay 80% and you'll pay 20%, or your insurance company will pay 90% and you'll pay 10%. And then you'll have a max out of pocket, and that is how much you're able to pay total in a year before the insurance company starts paying everything. So these are complicated formulas so that the typical person who has health insurance and goes to the doctor throughout the year, they will actually pay more for their insurance over the course of their life than the person who then they'll get back from the insurance company. The reason though is that if everybody pays a little bit more, then the person who goes to the doctor 5 times a year or the person who has to be airlifted somewhere and has a $100,000 medical bill that's paid for by the insurance is sort of being paid for by everybody. So that's sort of the insurance company's business model. It's important to consider deductibles and copayments. So, for example, if your car insurance deductible is $1,000 and an accident causes $17,000 worth of damage, $1,000 must be paid before insurance will pay the rest. So that's why it's important to have an emergency fund, because if you don't have the $1,000 to pay your deductible, then the emergency fund is not. Then the car insurance company is not going to be able to step in and pay the rest. Similarly, your health visits may be mostly covered by insurance, but you may still have to pay a small fee or copay. Having a higher premium can often decrease your copay and deductible. So when I gave that example about $150, that's actually a personal example. That is something that I paid for my health insurance when I didn't have a job that provided health insurance for me. And when I had that $150 per month premium, that was actually a pretty low premium. And when I had that as my premium, my deductible was several $1,000s. It was like $3,000 or $4,000, and my max out of pocket was like $10,000. And that was because I was paying so little for the month-to-month insurance. Really, it was just to make sure that I didn't have some $100,000 surgery and end up not being able to pay it and go bankrupt. So, and it's sort of the same thing with my insurance now. My insurance through the school and the school district. If I go with the basic plan, it's about $10 a month. It's very cheap. And I don't really have great health insurance. They don't pay for much. If I want to pay a little bit more, closer to $100 a month, now I have a really low deductible. It's like $800 a year, and I have a lower max out of pocket. And so it helps me out to pay a little more as time goes on. So is insurance worth it? Well, I sort of said this already, but honestly, most of the time insurance is not worth it mathematically. Now, you can kind of turn into a nerd and say, well, mathematically, it's not worth it, so I'm not going to do it. The problem is the consequences of not having insurance when something happens are so great that it's usually a good idea to have insurance. So I'm the person who understands the math here. I've done all the math, and it's not always a great idea to have. It's not always a great mathematical bet to have insurance. Okay, most of the time you're going to pay more for your health insurance, for example, than you're going to get out of it. I've never filed an auto insurance claim, and I've been paying car insurance for 16 years. I've never filed a homeowner's insurance claim, but I've been paying it since I bought my house. I've had renter's insurance before. I've never paid a claim on that. The problem, though, is if something were to happen, if I were to total my car, if a tree were to fall through my roof, now I've got more serious problems that I have to deal with. And so insurance is still a good idea, even if I know that on average, in order for the insurance company to make money, I'm going to have to pay extra. I'm going to have to pay more than I'm being paid for by the insurance company. Sometimes you can do some math. I'll give you an example. When my wife and I were trying to insure our vehicles, she has a 20-year-old truck. This was 6 years ago, so it was like a 15-year-old truck, and it had all these miles on it, and it was probably only worth about $5,000 back then when we were doing this. And I looked at the math and I looked at the numbers, and the numbers told me basically that in order for it to be worth it to, they were going to charge us like an extra $1,000 per year to insure it. And so my math that I did was, well, if we own this car under this insurance plan for 5 years and we don't pay for the full insurance, we're going to save all that $5,000 in 5 years. And so over the course of 5 years, if we don't get into a wreck, it's going to be worth it not to have insurance. And that 5 years has come and gone. We had liability coverage, which is where we pay for somebody else's car, which is required as the law for you to have that. But we didn't have the full coverage. For example, if you pay a premium of $50 on auto insurance every month, chances are it will still be less than the total cost of repairs if you were in a collision. So that's why it is important to have that. All right, so we've got a few different types of protection that you may need. We've got auto protection. This is designed to protect your vehicle as with you as the driver. There are many different plans, some of which include paying for repairs to another driver's vehicle if you're in an accident. That would be called liability coverage. It's also could pay, for example, if you were in a car accident and they hurt their neck and now they need you to pay for their doctor's bills and they're going to sue you, that would pay for that as well. Depending on the value of your car, you may also want to consider collision insurance, and that's sort of what I was considering with my car. And the new car, it's a 2017, we do have the full coverage, but on the 2000 truck, we do not. Homeowners insurance is designed to protect your home and property. It covers the cost of damage in case there's something like a theft or a fire, or a tree falls through your roof or whatever. Health insurance helps you pay medical bills. It includes things like prescriptions or coverage for major medical costs. Life insurance, it doesn't protect your life, but it provides financial protection and income replacement in case of death. Most people recommend that you have 10 to 12 times your annual income of life insurance, and you have that as a term life policy instead of a whole life policy. Never get a whole life policy. It's a financial scam. And then personal property insurance, this is sort of what we're talking about. This is where if you have something that's expensive and that you want to insure, but it doesn't fit into any of these other categories, like personal belongings, like a wedding ring or an antique painting. These are the types of things that you can insure here. And then last is travel insurance. Travel insurance ensures that you have access to quality medical care anywhere you go. Some international policies even include the option of being airlifted out of the country if you get extremely sick. So these are some of the insurances that you have.